Billionaire and entrepreneur Elon Musk has recently offered to take Twitter Inc. private in a deal valued at $44 billion, lambasting company management and saying he's the person who can unlock the extraordinary potential of a communication platform used daily by more than 200 million people. But his recent tweet about putting the deal on hold has made the world suspicious and plummeted the shares during the recent pre-market trading. So what exactly is Musk planning that we don't know about? Join us as we explore every detail of this hype topic to find out whether or not the deal has actually been canceled. So let's get started. Elon Musk is one of the most controversial and active users of Twitter in recent years, and now the billionaire wants to take full control of the social network, launching a $43 billion takeover bid. This was confirmed by the South African himself in a letter to investors published in the U.S. Securities and Exchange Commission, which he then posted as a tweet. Already on April 4th, Musk bought a stake in Twitter, becoming the largest shareholder with 9.2% of the company. However, he now wants to be the sole owner to bring free speech back to the heavily censored platform at a rate of $54.20 per share. Since making my investment, I now realize that the company will not prosper or meet this social imperative in its current form. Twitter must be transformed into a private company, Musk said in a letter to the Twitter chairman, Bret Taylor. My offer is my best and my last offer, and if it's not accepted, I would have to reconsider my position as a shareholder, Musk added. The South African entrepreneur is the owner of several companies and reached the top spot in Forbes magazine last year, surpassing Jeff Bezos, Bernard Arnault, Bill Gates, and Warren Buffett, also earning the title the Person of the Year in Times Magazine. Musk's 90 million Twitter followers make him one of the most popular figures on the platform too, but his frequent tweeting has sparked regulatory issues as well, such as his long-running dispute with the Securities and Exchange Commission after he tweeted in 2019 that he had the money to take Tesla private at $420 per share. That didn't happen, but caused the stock to jump and attract regulators' attention. So, as Twitter's largest shareholder, Musk has been expected to push the company on issues of free speech, a topic on which he's been outspoken. His acquisition offer letter underscored this issue, with Musk flagging his focus on, quote, free speech. In his offer, Musk also hinted that he may want to change how Twitter operates. For instance, he has called for wider access to verified accounts, or Twitter accounts that are accompanied by blue check marks, which is held in reserve for public figures, journalists, and other people in news. Now, weeks after agreeing to take the company private, Musk stated via Twitter that he's putting his deal on hold. Quote, Twitter deal temporarily on hold pending details supporting calculation that spam/fake accounts do indeed represent less than 5% of users, Musk tweeted. So what does that even mean? Musk's tweet initially sent Twitter shares down by more than 20% in the pre-market trading before stocks rebounded a little. So in his tweet after putting the deal on hold, Musk linked to a Reuters report released on the 2nd of May, which was about Twitter's most recent disclosure of its spam and fake account problem. In its Q1 financial report released on April 28th, Twitter estimated that the total number of fake or spam accounts made up fewer than 5% of the active users on the platform in the first 3 months of the year. The platform also highlighted that the estimates were made on the basis of a review of a sample of number of accounts, and the numbers were quite reasonable. However, Twitter also acknowledged that these numbers were not independently verified, and the actual measurements could be higher. Twitter has had this problem of fake accounts for years, and it's been stated by the company that reducing the number of fake or malicious accounts would play a huge role in actually growing the platform. So considering this, it's unclear why Musk would back off from this deal because of the recent disclosure. In a more recent note to clients, tech analyst Dave Ives of Wedbush Securities wrote, quote, Musk turned this Twitter circus show into a Friday the 13th horror show. Therefore, Musk would owe Twitter a $1 billion breakup fee if he were to cancel the deal. Ives also added that the street will view this deal as 1, likely falling apart, 2, Musk renegotiating for a lower deal price, or 3, Musk simply walking away from the deal with a $1 billion breakup fee. Many will view this as Musk using this Twitter filling/spam accounts as a way to get out of his deal in a vastly changing market. So, according to analysts, it's very unusual and out of the manner in which Musk announced the deal's pause, at least by normal corporate merger and acquisition standards. When someone acquires a company, he typically conducts due diligence, which includes a review of the firm's finances and proprietary information before the deal is closed. In that process, he may find out some information which causes him to rethink the deal or its valuation, but typically such a revelation would be closed in a filing with Securities and Exchange Commission, according to Josh White, an assistant professor of finance at Vanderbilt University and a former financial economist for the SEC. This happens as you get access to the books and access to proprietary information. What doesn't normally happen is a tweet, White said. There has always been skepticism about the deal from the start, so let's take a look at some of the major reasons why analysts believe that the Twitter deal may get canceled. Wall Street analysts were convinced enough of Musk's ability to buy Twitter either, at least not at $54.20 a share. According to a consensus target price, it was below $52, and the vast majority of the experts put a hold rating on the company's stock. Furthermore, part of the problem has been Twitter's connection to Tesla's fate, as we know that Musk, Tesla's CEO, has been planning to borrow against part of his Tesla stake to finance the deal from the start. But a major blow came from Tesla's stock, which has been sinking fast alongside most other stocks this year. Therefore, Musk selling a significant number of Tesla shares to help finance his Twitter deal had also put pressure on the carmaker's stock. Apart from all this, having already committed a big chunk of his Tesla shares elsewhere, he wasn't left with much of a choice as to whether he could pony up for more funds to complete the Twitter takeover. So in addition to selling $8.5 billion of his Tesla shares recently, or about 6% of his holdings, Musk was using his shares of Tesla as part of the collateral he needed to raise cash for the Twitter purchase. But the drop in the value of Tesla shares had raised doubts about if he would be able to move forward with the financing of the Twitter deal. The Wall Street Journal has also reported that the SEO and the Federal Trade Commission were both looking at Musk's purchases of Twitter earlier this year and whether he properly disclosed them. So, is Musk trying to get out of this deal? That's our next question. It has been noted that a few hours after Musk said that the Twitter deal is on hold, he tweeted again saying that he's still committed. According to the rules, he would have to pay $1 billion to Twitter in case he canceled the deal or broke things off, and the platform could also pursue a term called specific performance to compel Musk to go through with the deal. However, Musk has reportedly been seeking more equity funding in order to lessen the amount he'll have to borrow against in his Tesla stake. So it doesn't really seem like he's trying to weasel his way out. As for those who are still thinking that Musk can get out of trouble for his tweet, then let us know what you think he's most likely to do, and there are several reasons for it. The parties which can take against him are the Twitter investors, who sold their shares on the basis of his on-hold statement. So if the stock rebounds, they might argue that Musk caused them to take a loss based on this misleading information. However, the problem with this is that Musk could argue, just like he did in his 2019 pedo guy defamation trial, that he's just an idiot, and that any sensible investor would understand that he was bound by his agreement with Twitter and couldn't actually put the deal on hold. So we can basically relate it to when he asked Twitter users to vote on whether he should sell some of his Tesla stake, which he actually planned months before. So you can't really ignore what Musk says, but you don't have to believe it either. And this is it for today, guys. What are your thoughts on this video? Share with us your comments below. Also, don't forget to like this video, subscribe to our channel, and smash the bell icon for more amazing updates. And thank you for watching.